Hello, everybody. This is Joshua Hayes at BigWaveTraining.com coming to you with the stock market wrap-up for the weekend. I'm going to go ahead and get started with the NASDAQ, and I want to show you immediately how the NASDAQ just continues to lead. Look at the relative strength line on the bottom. Now, on 422, the NASDAQ was barely up. However, as you can tell by the relative strength line, the white line on the bottom, a massive, massive surge higher, indicated that it was definitely the leader. As it continued on sideways this week, it went fine. Or actually, just went on for one more day, sorry, this week. And still, even then, it was up a little bit, but volume was higher. Now, notice this. If we take a 5-day and combine it together, it's a 6-day actually would be better because then you can see the volume. Look, the past 1, 2, 3, 4, 5, 6 days have been higher. This is a run that's very unusual to see in the stock market. I mean, you can see it back here in '07. And normally, whenever you see it, it's actually pretty bullish. But to buy the market hard after 6 weeks is kind of crazy. The best thing to do is wait for a pullback to the 50-day moving average. That's your best bet. So it's been a great 30% run off the lows. And as you can see, the 50 is coming up to the 200-day moving average. And as I have told you, if you wanted a simple way to play the market, you buy the market when it's above the 50-day moving average and above the 200-day moving average. And the stock's above the 50-day moving average. Had you done this, and also reversed the thing and sold, as you can see in 2007, you would have been out early in 2006, would have been back long in 2007. Not much would have happened, though, to the top in October. Actually, we did this too. Still, it was a good run. And then as you can see, as the market starts to top and roll over, right here it breaks down, and there's the death cross. So let's say you held it on to even the death cross, and you didn't sell to like right here at the lows. You still saved yourself from a nasty, horrible 43% drop in the stock market simply by just obeying the death cross. If we have never had a golden cross since then, as you can see here. Do you see the white line ever get above the purple line? No. You guys watching this for free can't see it, but you know what? Just go to your own charts and look at the 5200-day moving average. Seriously, I give full charts only for subscribers for a reason. So that's that with that. And if you want to go back, let's go to 2004, the 2004 area. Now, notice here, 2003, you get the golden cross. First, it's below the 200-day moving average line. Price never gets back above it. Stays short time. Tries to get back above here, here, here. But finally, there's the golden cross. What happens after the golden cross? You get a golden run-up of 55% in less than a year. So it worked magically. And then after that, the market couldn't hang on. You had a death cross. Market goes below it. Saves you out of it. Let's say you didn't get back long until the 50 was back over the 200. There you were back long. And the market just rolls back over. See, it stays long. There you go. There's the golden cross. And it just stays. There's your sell in 2006. Right there. You're out actually pretty well. There's your buy, 2006. So as you can see, you're still getting meaty portions of the move. So anybody that thinks that you've missed the bottom, for God's sakes, guys, you must be new investors. Because if you learned anything about what I continue to teach you about 2003 and 2004, remember all the big, huge winners I got in 2003? Remember all of those that I posted even for you guys not around? Well, let's say you didn't get the bottom in 2002. Oops. Let's say you didn't get the bottom in March. Oops, right? You did bad, right? You did really stupid. You're an idiot, right? Wrong. Because there's stocks like this out here. There's stocks like EGHT that are ready to pull back to the 50-day moving average like this, bounce on very strong volume. Look at those 2 days. Look at the 2 days combined. Boom. 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 That's got to do the 4 days because it won't let me do the 3 days. So let me do 3 days. There we go. Let's see if it'll do 3. Nope, even then. But just look at how the breakout works, though. Boom. First buy. Second huge buy. Boom, boom. Boom, boom. Wow. Oh, looks like I didn't buy too late at all, did I? From my first buy and then to the second buy. I know I like to use this, but this is the best one to use. 300%. Okay. So let's pretend like you missed it. Like you didn't even get that, okay? You completely missed the whole year 2003. You didn't recognize the bull market at all. You're an idiot, right? You're an idiot. You don't know what you're doing. You're stupid, right? Well, MT says that you're not. Because by being patient and waiting for this breakout, look at the volume. Look at the bop go to max green bop. Look at the breakout. So here you are in March of 2004. Oh my God, look at you. You missed this huge rally. What an idiot. You missed the 327% rally. What a moron we are. However, this chart clearly says, hey, don't beat yourself up too fast. So, from just the breakout to here, 306%. Awesome. Awesome. Looks like we're not that stupid. Let's get back up there. That's about the high right there. My memory's sharp. 352% in less than a year. I don't know what the problem is, guys. I don't know why some of you guys think that you've missed the bottom. It is seriously because you just don't know the stock market. If you knew the stock market, you would know that you didn't miss the bottom because, once again, I'm going to use another example. Okay, so now oh, it's gone. Okay, let's use another one. Okay, so let's say you missed 2003 and 2004. You're just a big dummy. You don't know anything about the market, do you? You just don't know anything. Market's just too impossible, isn't it? Nobody can figure out the market. Except for people that use charts, that use technical analysis. Because then they can go back and be like, boom, breakout, Gigamedia. It's not perfect, but it's still a breakout. Go along, though, another breakout. Not perfect, still it was good. And as you can see as it goes along, oh, you know what? I am using a 2-day chart. That's why it doesn't look right to me. I'm wondering, why doesn't this look right? This doesn't, okay, cool. So let's go back out to here. Daily chart, there we go. So you missed the 2002 bottom, you missed the 2003 bottom in the stock market, and here you are in 2005 feeling like an idiot. You feel like you missed the whole rally. 1, 2, 3 years have gone by, and you still haven't gone long a single stock. What a dummy you are. What an idiot you are, right? What's that? Isn't that a breakout? That's a breakout from a saucer with high handle, isn't it? Yeah. There's the saucer from July to November. There's a high handle November, December. Hitting new highs. Okay, that's good. All right, that's great. That's great. Oh, look, another breakout to buy. There's our second long. Wow, man. Wow. Look at it go also, by the way. Oh, man, you just don't know, man. We're just so stupid. We're just so stupid. Let's say right there, man. Okay, all right, I'm done with it. I got to get out. I got to get out right here. I got to take some profits. I'm sure it's only going to be a few percent. Nope, it's 254%. And what is that on margin? That's a 508% return in 1, 2, 3, 4.5, almost 4.5 months. Also, 3 years past the bottom of the 2002 bear market. You're not only 3 years late and looking like an idiot, but now you're 508% richer come March 2006. I want you to go back to a lot of these swing trading sites and a lot of these, pardon me, I know it's good for you, but seriously, it's stupid in the stock market. Day trading sites. I want you to compare their returns from 2002 to 2006 May top. See if they even got a 508% return during that time, while Gigamedia gave you 508% in 4.5 months. Now, what I wanted to show you that doesn't exist anymore during this time, during the exact same time, was ERS. ERS doesn't exist anymore, so you're going to have to do some research and go to my website, look up past big winners, and then when you're going through the past big winners, go find ERS, type in ERS, and go see what it did from November to May. I had more Gigamedia, and I had more than 250% stock, doubled, but ERS returned 550%. How would you know it was a good stock? It had an EPS of 98 and a relative strength line of 99 before I went long. 550% doubled is 1,100% in 4.5 months. Actually, this one kept on going. ERS, where Gigamedia's already topped, was topping now in May. It was doing a parabolic top. You'll go see on the charts. The 550% return on margin, excellent. Fabulous. 250% return on margin. Dude, that's amazing to get it that late in the rally. But let's say that you did everything right. Let's say you got Gigamedia, you got MT, which was IST in 2004, and then you were with me and you got along part of the ride for Taser. I have a question. Why do you think we've missed the bottom? That right there is just a 2,419% return. Let's keep going, though.